Good day, all. Ira Epstein of Linn Associates on this Columbus Day, October 14th, 2019, and we're going to get the settlement in these markets in the next under a minute. You'll see the letter S come up in them. But this is very close to where these markets all finished, and it's an interesting day. President Trump did put on more sanctions on Turkey, as he threatened to do. They're not enough. Not with all the people being killed, but this is not about politics, these videos. These are about the markets. Now, today the government basically was closed. We had one report come out, and for those of you that get my research, you'll see that report as I covered it in detail tonight. But suffice to say, we have the Brexit situation unresolved. We have a U.S.-Chinese trade deal that, as you looked at it over the weekend, and that's why this market paused, I think traders are questioning what we really have. I'm not saying it's not a deal, but I'm also saying it isn't a deal. It's the framework for a deal, a pause in the trade war, and can they get it on paper before it falls apart? That's going to be the big question. Energy markets didn't like what they saw. They dropped a little bit. Bonds and notes put back in a safe haven bid. The yen was up slightly as well. And these are the settlement prices that just came in all these markets. You can see where they're at right now. So let's take a look at the S&P. The market has corrected from this high close of 3024.50 and then another run at it at 3013.60, dropping now down back into the 18-day average of closes. Now, this is a close-only chart, and it did settle today at 2965.50, as you can see, just about at that 18-day average of 2961. So very neutral right here. We had a big rally that has taken place over the past 8 to 10 days, and the market's back into this resistance zone. But in the process, it did turn the trend up because it's measured by a swing line. Now, this is a chart without the swing line. I teach the swing line theory and how to do this and even how to draw it by hand in my charting course that I'm going to talk about right after this. Suffice to say, you've got a pattern according to the swing line of higher lows and higher highs. The definition of an uptrend is, by most technicians, higher highs, higher lows. If you were to break 2881.75, that would break this pattern. The 18-day average of closes is this red line. When the market is over it, it says the bias is up. So as I define this market right now, I've got the trend as defined by the swing line up, and I have the bias up. Support comes in between the 18-day average and the 100-day, but if it gets under that 18, the bias switches to neutral. If we take a look above the market, where might resistance be? One of the numbers I use, and it's 1. I have others that I use, and when you take the charting course, you learn about window envelopes. But suffice to say, 3024.5 is the next resistance number. That seems to be dropping each day if you take a look by about 3 to 5 points. So I wouldn't be surprised if it's close to 3020 tomorrow as we come in. If the market were to get over 2994.5, you would continue the pattern of higher lows and higher highs. But right now, you're coming down the challenge, that line in the sand, as I call it, that 18-day average of closes. And momentum is measured in the market, not quite overbought, but knocking on the door. Any number over 70 in the slow stochastic, as it first gets there, is overbought. So I'm getting to a market that when it reopens tonight, if it were steady, it probably gets itself a little bit overbought. And as I said before, support in between the 18 and the 100-day average. In the NASDAQ, very similar picture, but overbought already. Here you are, you can see that. If the market rallies, I look for resistance at 7938.60 roughly, support back at the 18 to 100-day average. The nice news is that these markets can afford to break and still have moving averages supporting them. In the Dow, it's the same way. You have a market that's got upward momentum, knocking on the door, just like in the S&P, of becoming overbought, support between the 18-day average and 100. If the market were to put another level to the upside by getting on over 26,975, well, wherever this Bollinger Band comes in, I'd look for the resistance. That Bollinger Band is falling right now to the tune, let's see, 27,373, 354, and then about 40, 50 points a day. So that could take this market down into the 27,200 plus area. In the Russell, resistance pretty evident between the 18-day, the 100 that you hit on Friday, then the 200. This is a market without a trend. This is a market that had a vertical price drop, has finally gotten a bounce, and it hasn't set up a new trend yet. It's got a lower low, higher high from my perspective, and the bias is down while momentum is up. It's a mess. When I come to the VIX, the market's in a downtrend, lower highs, lower lows. But it lost its downside traction today to a degree. It got oversold, decided to spin back from that low, and went back. And as you can see at the end of the day, it's fighting itself. Let's see, it hit the 100-day average. It finished at 101 lower, right in through this area. It fought back here, just couldn't hold on to it. Will it continue down? That's a big question. If it gets down to 1337, here's my expectation. I would expect the pros to step in and write puts down here, trying to get back to the 1600 level. So whatever short-dated puts they do, they'll do. In the T-bond market, I think you peaked out up here. You can see that. Then you stepped under this last break low. We're not trending. We have a higher high and lower low. I think the Fed has its hands full. How does it look at the potential for a trade deal? And today's the 14th. At the end of the month, we have the October FOMC meeting. Do they keep that bullet in their gun and say, you know, let's just see if they can do anything in this next 3 to 5 weeks? Or do they step in and give you more of an insurance cut? I'm not smart enough to figure that out. But the charts aren't either. They're not trending. They're doing nothing right here. Same in the 10-year note, or is it? Nah, the 10-year note's in the bear camp. Lower highs, lower lows. This market is not in oversold territory. A reading under 30 will put it there. Resistance back at the 18-day average of closes, with support, if the market breaks, in between the 129.07 and 29.05 zone, the combination of the 100-day average and the lower Bollinger Band. TLT is not trending. This is an oversold market that's got a lower and low, higher high pattern, more like the bond market, if you will. Resistance back at 142.96, support in between the lower Bollinger Band and the 100-day average of closes. The dollar index is in a downtrend, however, it's very oversold. It has a 25 stochastic reading. Anything under 30 I consider oversold. The market had a shot at getting to the Bollinger Band on Friday, didn't quite do it. Now the question is, if it rallies, I'm not saying it will, I don't know, I'm giving a guess that if it rallies, I'd look for the resistance by the pros at the 98.48.5 zone, this 18-day average. As long as the market doesn't take out 98.95.5, the trend is measured by the swing line stays down. The problem is the oversold condition. In the eurocurrency, it's the flip-flop of the dollar. You have an uptrend at hand with higher lows, higher highs. The bias is up as you're over the 18-day average, but you're very overbought. Resistance, the upper Bollinger Band. It too had its chance to get there on Friday and didn't. Then we get to the British pound, which still has no deal that I can see anywhere between Europe and the UK. So the question is, this is the week of the 19th. By law, Mr. Johnson, the Prime Minister, is supposed to ask the EU for an extension if he can't get a deal. I didn't say he doesn't have a deal. He's made proposals. So far, the EU is playing hardball, saying they fall short. So what you have here is a pattern of a low and then a vertical price rise, as we all thought there were some breakthroughs on the Irish backstop. Now the market's paying attention to the upper Bollinger Band. It generally does, and saying, wait a minute, I'm going to pause there. Is the market overbought? Any reading over 70 is overbought. That's where you're at. Then we get to the Japanese yen, which this is pretty much a vertical decline in the market in a downtrend, has hit its downside target on Friday, tested it again today, and rallied from there. You are oversold. You've hit the lower Bollinger Band. Now the question is, what is next? I see resistance still at 93.37.5, but terribly oversold condition. In Bitcoin, no trend. The market finally worked off getting back to the 18-day average of closes without a trend. You have a higher high, lower low, and the market is sort of looking for whatever it's going to do next. You have everything fighting each other. You got the bias down, no trend in the swing line, and as measured by slow stochastics, momentum to the upside. Brent versus WTI crude seems to find a home, have found one, between the 550, 570 level for the moment. When we take a look at the bar chart of the crude, and this is the Brent, I should label that Brent for you, I thought I had. You've got the lower low, higher high. That's not a trend. You've come off these lows into a resistance zone with an outside day down today. Now, until that high is taken out, which came in between the 18-day average and the 100, the market is just sort of drifting here. You got your momentum up, the bias pointing down, and no trend in the swing line. In WTI crude, it's the same pattern. You have your momentum pointing up. You got to the 18-day average both Friday and today, couldn't do anything with it. You have a lower and low, higher high. I don't see anything right here. Gasoline's different than that. It's in an uptrend. You have the higher lows and the higher high. However, today's action stunk, to put it mildly. The market made the highest high of the recent move, came back down, finished at 157.02. It did manage to close over the 18-day average, but in the process, you're about to get overbought. I'd be cautious, but I'd certainly have a bullish bias to that market. I don't have that yet in the natural gas. What I have in nat gas is more important to me. This was a market that, if we take a look, both numbers were under 20. Day before under 20, the day before under 20. Therefore, I have what's called an embedded reading. You weren't there last Tuesday. But 3 days in a row under 20, and if you lose it, got to be careful. It often means that, number one, the shorts have lost control of the momentum, and if the market does as expected, that often leads to price and the closest of the key moving averages, the 18-day average in this instance, coming together. What else did the market do today? On the rally, it took out a previous rally high. A previous is you were breaking one of these highs. So now you got a higher high, lower low, momentum loss, putting into play this area. So I think the shorts came out of these markets today. You know, one of the things I talk about is my charting course, and I have a lot of pride in it because I created it in a way that if you put in the time and you follow the methodology, you see what I do, I give you the same chart data, you do the same thing. Some of it requires you to, if you will, draw on the charts, but I teach you how to do that in the charting course. Then you're going to learn all the tricks and parts of Bollinger Bands, slow stochastics, window envelopes, a study I do not show actually in these videos, but I do in my morning subscriber video. And the charts will look very much like this. You know what else I do? I cover the name of charts a lot. I want you to learn patterns. I'm not interested in what you think went back on in a video that I recorded a while back. Not a long while back, but a while back. Why? When you do that, what you get is the benefit, as I call it, of seeing the chart pattern. You're seeing the same thing. You're learning by rote. Then in the mornings, I take you to my morning subscriber video, which is included with all this. And that's where you see today's action, and I reinforce what you're learning as you go along. Now, the course includes the full charting software package. You get the top end of our charting software, a $99 value. You get our mobile application so you can see quotes, charts, news, my videos, including the subscriber video, another $40 value. My research, I charge $60 a month for my full package. Now you've got a value that's $200. The whole course is $179.95. 6 hours of videos, learning, and as I said, I'm about to start now the webinars. Those are right around the corner. When I say around the corner, my tech people are now working on making my special reports, video reports, ready to post probably in a week to 10 days. As I do that, I'm going to begin everything else for what I call that fall season. So it'll start up for you very shortly here. So you get all this, and how do you get to it? Well, just go to our website at www.iraepstein.com under the word education. We have a facts page that explains everything, and you can sign up for it right there, get you all signed up, and you start your video experience. And it is an experience. I think you're going to like what you see because you're going to learn disciplines, guidelines, and everything's explained, I think, in detail. Click up here. If you're watching me on YouTube, it'll take you to that page as well. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.